All right, so let's take a little look here at how I use a couple different main indicators to get a view of the current market environment. Is it good for trading? Not good for trading? Maybe even a good long-term investment buy point? We'll see. So the three major things I use are market internals, market breadth, and then individual stock behavior. So first things first, well, one shout out to TA Plot for creating this really cool volume pocket pivot indicator. I'll link him to the comments for this indicator if you want to use it. But number one, I look at market internals. So this is a net high, net low indicator. Hat tip to Matt Caruso from Caruso Insights and John Muschchow for building this. I'll also link this indicator. It's a great indicator. But this right now shows the net high, net lows of the NASDAQ. And everyone kind of does this a little different. Some will remove pink sheets, over the counter stuff, stocks trading below a certain price. But this one's been a really good one. And it's been, I think this is 33 straight days now of net lows, which is a record, at least going back to the COVID 2020, March 2020 crash. So not a great environment. So this is number one, like how are these looking? And if you scroll back in time, well, let's pull this up so there's not much stuff on the chart. You can see, look, here's the COVID. It was deep and it was short. And then we just straight green, right? Markets just ripped from here. But what started happening in 2021 is, we started getting some of these net lows showing up again, and for a few consecutive days as the market continued to push higher, mainly on the back of, some mega cap stocks and a few individual sectors. But overall, a lot of the heavy or high growth names that really ripped in 2020 peaked actually at the beginning of 2021, January, February. If you looked at I guess if you want to use something like an ARC as an example, I mean, this all kind of topped out, way back here in February of 2021. But the overall market continued to push higher, even though internals were starting to break down here. Not a great sign, telling you things are getting toppy. And then, of course, we went through 2022, and outside of oil, gas, some other natural resource stuff, markets just really kept making lower lows, lower highs. So this is the first indicator I use. The second thing, and I used to do this manually on my own, and this is why I created the my.Breadth app, which I'll show you here, is I used to go through every weekend, Friday or Saturday, Friday after close or Saturday, and I'd go through every sector, which there's only 11. This one's pretty easy. And I'd say, okay, how did this change? Okay, downtrend, and now we've broken, the 10 week is the same as the 50 day, and the 40 week is, they're roughly the same as the 200 day. And I would kind of rank these things, like how many of these are trending up versus, in a full blown downtrend. XLU, my goodness, interest rates are a killer. Real estate, XLRE, same thing. But then I would also do it by, industries, of which there's about 20. So I'd go through and do the same thing here. And then I do it for almost 50 subsectors. So it got to be a lot of work. So I created the my.Breadth app, which is, it's not out yet, but it is free. It will be free to use for anyone. We don't even take personal contact information. It's just username, password, and you can create your own custom portfolios. But also here, I have some already built-in things, and I'll link the video that discusses how my.Breadth works a little bit more. But you can see here, and today is October 22nd, here's market breadth, right? Of the 11 sectors, not even 10% above the 20-day exponential, industry subsectors. When we go all the way to the 200-day simple moving average or the 40-week, combined across all three categories, you've got not even, basically 20% are above the 200-day simple moving average. So not a good breadth environment. And then the same thing with indices. There's not nearly as many, but, I've only got here, this shows us having two indices. Again, Magnificent Seven, it's all we ever hear about. This is it for the indices. And if we were to look at sectors, it's energy, right? It's oil, gas, uranium. Same thing has happened, March of 2022 when Russia invaded Ukraine. So breadth, not good. Built this app to make it a lot easier to look at that. I also built this application, right now it's just a tool, but I'm hoping to make it also publicly available, that allows you to kind of look at signals. So this shows you the percentage of industry ETFs, and this can be anything you want, sector, subsector, trading above the 50-day simple moving average, similar to the 10-week moving average. And then you can set parameters to say, when does this highlight? And so for me, I did it as when every single industry is trading below the 50-day simple moving average. And I did this about 2 weeks ago. And so you can see we got another signal here. It's not necessarily saying, hey, buy or sell. It's just telling us the trading environment is not great. It's not great for longs. It's not great for shorts right now. And so this tool helps to show that too. And you can see it can be a good long-term buying opportunity. But when we're stuck in a downtrend, lower highs, lower lows, it tends to keep pushing. And this just is not a good environment for traders. Could be for long-term. We'll see. And the last thing I like to look at then is just individual stock names. So, this is kind of a focus list here. I mean, we can see things like, to take this off of here, things like Adobe tried to break out, brought back below the 50-day, tried to break out, brought back to the 50-day. CrowdStrike, which is a cybersecurity play, a heavy engulfing bar here, and broke it down. It stuck here at the 20 exponential moving average. We'll see what happens. NVIDIA, one of the big kind of AI themes with their graphics processors, kind of building a pretty eerily looking head and shoulders pattern here, which if it breaks, this area, probably not going to be great. Another one here, Palo Alto Networks, another cybersecurity broke out, boom, hard down on volume here. And so overall, and one last thing I'll look at is just this list. These are stocks that all have pretty good fundamentals. You basically had 3 names on Friday, which was October 20th, up, the rest just down. And, it's just not a great environment. So again, looking at market internals, which I use here, and again, I'll link this. This is from Caruso Insights, Matt Caruso and John Muschau. Not good. Looking at breadth, we can see terrible, right? And then individual stocks are just not doing, at least the type of stocks I look at to trade, which are, mid-cap growth type stocks mainly. Not good, nothing good happening. And of course, if you just take a look at the overall, if we just look at the Qs, the market is stuck in a clear, downtrend here with potential support here. Here's the 200-day moving average. Just a lot of distribution happening. So we'll see what happens. And that's all I got for today. Thanks.